top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets pose the sharpest drop in 2 weeks, led by metal stocks. Indian steelmakers decline after President Trump says America will impose duty on steel and aluminum imports. China aims to grow at 6.5% in 2018. The Asian giant also wants to trim its fiscal deficit for the first time in 4 years. AUROBIN Pharma is down more than 3% after the US FDA makes 9 observations on its Hyderabad plant. We'll get to all of that in a moment, but let's take a quick check at how the markets are faring. President Trump's protectionist rhetoric is clearly weighing on the mind of the markets globally, steelmakers in particular. Neeraj?
Yeah, actually you summed it up. To be honest, that's the key thing. We're down about 1.25% without the Nifty bank really showing as much damage. The banks are not really down as much. Remember, for the past few weeks, banks have been at the forefront when it comes to leading the charge downwards. Today, that is not the case. The Nifty about 130 points, the Sensex about 375 points. India VIX has moved up quite considerably in the session today, I might add. Even the last couple of weeks have been weeks of VIX coming off. Today's session, 13% uptick in India VIX. That takes it closer to the 16 levels. So quite a sharp jump in volatility. And if you look at the Nifty 50 losers, you will see, yes, there is an AUROBIN Pharma out there on news, but otherwise a clutch of metal names, the large ones, Hindalco, Tata Steel, Vedanta, non-Nifty, JSW Steel, etc., are all facing the brunt. JSPL is down about 7% as well. So metal names right out there. Tata Motors, you can again argue that there is a lot of to and fro on Twitter about Trump saying that, hey, maybe we'll take a look at the EU cars as well and the exports thereof. So maybe that's one factor. The monthly sales could be one factor too. So keep those points in mind. The story is about what's happening here. Just I must add though out here, and we can talk about individual stocks, Harsha. I mean, you know, Thomas Cook is up, Quest Corp is down because of that proposed restructuring. Phoenix Mills has that large block deal and therefore that stock is up. But from an index perspective, if we close at these levels, 130 points down for the Nifty and whatever time points down for the Nifty Bank, and if you look at the RSI, never before in the last 1 year has the Nifty Bank closed convincingly sub the 200-day moving average. Never before in the last 1 year has the Nifty really gone dramatically lower and stayed lower below the 100-day moving averages. If we close down at these levels, we will do that. And then it's a question mark of what quantum of downside, because then there are no immediate supports in sight. So these are crucial levels. Let's wait and watch. That's the Nifty 50 trading very close to the 100-day moving average, which is the blue line. As you can see, we haven't quite really dramatically tested that line, the 200-day moving average. Similarly for the Nifty Bank too, I think we've corrected quite a bit. Let's see if we indeed breach those levels and stay below for a few days.
You're not seeing a clear direction at all emerge right from the beginning of this month, have you?
No, not at all. FIs, consistent net sellers. We can argue that last week was a bit of a pause. So funds have been selling. DIs can support only as much. They can absorb the selling, but they really can't take the markets to new highs. So yeah, there is no clear direction. Every rally is being sold into. This time around is no different.
That's the story for the markets. Neeraj, thank you so much for that. But the big story today that really has weighed on the market, as I mentioned, globally. President Trump has stirred a potential global trade war. America has decided to impose a 25% import duty on steel and 10% import duty on aluminum. Trump tweeted, and I quote, "When a country is losing many billions of dollars on trade with virtually every country it does business with, trade wars are good and easy to win. Example, when we are down 100 billion with a certain country and they get cute, don't trade anymore. We win big. It's easy." Now, this tweet has triggered strong reactions from countries, the United States' biggest trading partners, especially the Europe. Chief of the European Commission, Jean-Claude Juncker, has said, "We will now impose import tariffs. This is basically a stupid process. The fact that we have to do this, but we have to do it, and we will have to now impose tariff on motorcycles, Harley-Davidson, on jeans, on bourbon. We can also do stupid things." That's the Chief of the European Commission reacting to President Trump's tweet. Meanwhile, American companies from car makers to beer makers are worried about supply of raw materials, higher costs and reduced competitiveness. Let's move on and figure out what this decision, while riling up European and corporates within the United States, this has not really evoked a very strong response from the world's largest steel maker, China. Bloomberg's Enda Karan now joins us from our studios in Hong Kong to tell us how Asia has been reacting to all of this. Enda, thank you so much for joining us on Bloomberg Quint. What's been China's reaction? What have we heard so far has been rather subdued.
Yeah, it has indeed been relatively subdued, given, as you say, the world's biggest steel producer. We might have thought they would have shot back. So far, the Foreign Ministry has merely stated that America should play by the rules of the global trading system. We've had some individual representation from a steelmakers lobby, for example, warning that they would strike back. But I think maybe the China response has been complicated by a little by the fact that one of their top economic officials was in Washington last week for talks with the US. To try and diffuse some of the trade tensions. So maybe there's a case of a wait and see on the China side about how they can go about easing and placating the hawks in Washington, and perhaps they're planning to offer some concessions. But nonetheless, there's a feeling that this issue isn't going away anytime soon, even if China has been a bit more subdued. If anything, the reaction from the rest of Asia was quite noteworthy. Japan, South Korea, Australia and others were all expressing either disappointment or calling on clarity from the US government on what these tariffs mean for them.
The timing of this tariff increase or the levying of this tariff comes closely with the NPC meeting in Beijing. Is now Beijing prepared to accept this protectionist rhetoric or actions from Washington becoming a reality?
Well, I think there are two schools of thought on it. There's a school of thought that China, from its own point of view, will have to and will indeed strike back against the US. Remember, they have warned, since President Trump got elected, they have warned periodically they're willing to strike back. They can target orders for US goods out of China, or they can target Chinese investment in the US and the like. And as you say now, with the NPC this week, the rubber stamp parliament, President Xi Jinping is going to come out of that even stronger. He will be approved as effectively as a president for life. So China is in a reasonably strong position. They've got a stable economy. Xi Jinping is doubling down on his authority, and obviously they're waiting to choose their moment as to when to respond to the US. And that's why there's a feeling among analysts that even if they want to respond, perhaps right now they're just waiting to see what the next step is by the US. But there's no doubt that they have options on their side too if they need to.
Enda, good talking to you. Many thanks indeed for joining us. Enda Karan reporting from Hong Kong there about what China had to say or what rest of Asia had to respond to President Trump's protectionist rhetoric. Kansas University professor Rajpal believes that this is a slippery slope, both economically and politically, as more and more countries import duties on products, especially if countries start to invoke the national security clause. Listen in.
The worst case scenario is a global trade war that covers many more commodities beyond steel and aluminum, and also results in World Trade Organization challenges to the United States, which the United States then invokes the national security exception, and if it loses the case, simply ignores the WTO ruling. And even if it wins the case, other countries start invoking that same exception, and we're headed down a slippery slope of many countries taking so-called national security actions. So it's both a parade of horribles economically and politically.
All right. Fears of an imminent trade war are obviously working on the mind of the market. It has triggered strong reaction in the currency market. A majority of Asian currencies are trading higher. The rupee has gained about 0.25% against the US dollar. We will soon be joined to discuss the impact on the global currency market by Vivek Rajpal, who will join us to give us a sense of what's going on. Specifically, you have seen the yen too move up significantly. This is moved to a 16-month high after those protectionist statements came in from President Trump, and this is clearly working on the mind of the market. Let's also try and understand what this means for the timing of the market as well. You know, this has come at a time when China's NPC is meeting to discuss the road ahead for the Chinese economy. Remember, China's GDP is coming at about 6.5%. It's also announced that it's going to rein in its fiscal deficit, and more importantly, it is going to go ahead and reduce the fiscal stimulus. That would mean that the borrowing is supposed to stabilize, the yuan is expected to stabilize. Coming as it does, this protectionist rhetoric from the United States is going to weigh on not just the global market, it's also specifically going to rest on how China is going to be reacting. Okay, let's focus specifically on what China has said. This was the fastest growing economy globally. China, as I said, has set a 6.5% target for GDP growth in 2018. Premier Li, in his annual report to the National People's Congress in Beijing, also cut the budget deficit target for the first time since 2012. The deficit target has been lowered to 2.6% from 3% in the past 2 years. Bloomberg Intelligence's Tom Orlik now joins us from Beijing with more details on this one. Tom, thank you so much for joining us indeed. What have you made of the specific growth forecast? Has that come in line with expectations? Does this number seem a lot more credible than in the past?
So on growth, on the growth target, there isn't a huge surprise in this year's work report. Last year, Premier Li Keqiang said that he was going for growth of 6.5% or above if possible. This year, he's sticking with 6.5, but he's left out the or above if possible. So it's basically unchanged. You could make the case that there's a little bit less optimism in there. The surprise coming out of today's work report was actually the policy signals. I think you mentioned it. The target for the fiscal deficit has come down from 3% of GDP last year to 2.6% of GDP this year. The target for growth in money supply has come down a lot. So the question is, well, if you want the same amount of growth, but you're prepared to offer less support in terms of fiscal and monetary policy, where's that growth going to come from?
Is this focus on deleveraging, Tom, also more about enhancing the quality of growth rather than, keeping the engine, moving at a faster pace?
Yeah, so you certainly hear both of those messages from China's leaders, and the messages, of course, are linked. Improving the quality of growth is a broader idea. It's about growth which is more balanced between investment, exports, and consumption. It's about growth which comes from moving up the value chain, not just continuing to exploit low value added, low cost production. It's about growth which is environmentally sustainable. Deleveraging is, of course, specific to the financial sector, and that reflects the concern that growth in the past has been basically coming from very rapid expansion in bank lending, paying for investment which drives growth, but maybe doesn't produce too many productive assets.
What about monetary policy? Has there been any change in their stated position, and what have you factored in?
Yeah, so the interesting thing on the monetary policy is normally in Premier Li's work report, you'd expect a target for M2 growth. Last year, they targeted 12% M2 growth. This year, they didn't set a target. They said, we want M2 growth to be roughly in line with where it was last year. Well, last year, M2 growth came in way below expectations. M2 growth slowed to 8.2% last year, a reflection of that deleveraging campaign. So the main takeaway from the work report on monetary policy is that Premier Li and his team are comfortable with M2 growth around where it is now, around that 8.2% level. Certainly that suggests there's not going to be any loosening in monetary policy. If anything, it suggests a further tightening.
Final question, Tom, and this is purely about the timing when we're having this conversation. We're talking at a time when President Trump has sort of upped the ante on trade barriers. Is that materially likely to affect China at all?
So as of now, the tariffs which Donald Trump has announced on steel and aluminum are basically going to have zero impact on China's economy. China doesn't export that much steel, doesn't export that much aluminum, and that which it does export basically doesn't go to the United States. So the signal from Trump's steel and aluminum tariffs is certainly an alarming one to China's leaders. If we see much more in that direction, if we see tariffs on goods like textiles, home electronics, the kind of things China does export to the US in very large volumes, we'd start to expect that to impact the aggregate export and GDP numbers. But if we stop today, if we stopped with steel and aluminum, it would be pretty difficult to see the impact of that in China's aggregate economic numbers.
Tom Orlick, always a pleasure. Thank you so much indeed for joining us. Tom Orlick from Bloomberg Intelligence, talking about the impact of what the NPC has said today in Beijing and the potential impact of President Trump's protectionist measures on China. But these fears of an imminent trade war has also triggered strong reaction in the currency markets today. A majority of Asian currencies are trading higher. Rupee has gained 0.25% against the dollar. To discuss this, what this means for currency markets, let's welcome in Vivek Rajpal, rate strategist at Nomura. Vivek, thank you so much for joining in. What have you made of this protectionist rhetoric? Is this clearly creating some nervousness in the market?
Yes, it's definitely creating some nervousness. And actually this nervousness has been visible ever since announcements regarding this came about. But this nervousness is more visible in the equity space as of now. Indeed, we have seen some flattening in the yield curves as well.
Okay, I was just looking at the yen-dollar equation as well, Vivek. We've seen that the yen has reacted quite negatively to this. Are emerging market currencies bracing for a bout of volatility then?
Yes. So our view is over a medium term, this is negative for EM. Clearly, it has been the big dollar fall, and which is, as you said, led by the dollar yen, which is responsible for reaction in the currency markets. But more from a medium-term perspective, we have to. We believe it's more of a negative, but. As far as the currency impact is concerned, to us this looks EM currencies impact versus dollars should be negative over a medium term.
Okay. Specifically about the rupee as well, Vivek. You know, we are coming off a fairly decent 7.2% GDP growth print on the headline number, at least for October, December. How are you feeling about where the rupee is headed in the near term?
Well, at this juncture, we are more or less neutral on currency. Clearly, GDP number was a positive surprise, so it should provide some support to INR. But at the same point of time, we note that it's a little bit of a risk-off kind of an environment, and which is making us neutral in the near term or not. Okay. I think what we really need to see is really the impact of there are some important global events lined up. For example, this week we have a meeting, then March 22nd we have a Fed meeting, and I think are particularly important meetings because I mean, just even before this tariff or the trade, so-called trade war talk started, the first bout of risk aversion actually came after Powell's testimony last week. So, Fed, DM central bank monetary policy is an important element which we like for really taking a strong call on that.
Vivek, we leave it there. Thank you so much indeed for joining us with your views. Vivek Rajpal from Nomura talking about the impact of this on the currency market. The yen has reacted sharply in the near term. Nomura seems neutral on the Indian rupee. But yeah, what's the real impact? It's not just China. Even India doesn't seem to be overly perturbed about the import tariff that's been announced by the United States. The reason is fairly simple. Only a small quantity of the steel produced in India makes it to America. That said, it doesn't mean that Indian steel makers don't get affected at all. Nikki Mirchandani is standing by. She's been scanning through all brokerage reports to tell us how big this impact is likely to be. Nikki.
Sure. U.S. Department of Commerce has actually suggested that the recommendation on Section 232 investigation under the national security purposes suggested. Trump hinted that there will be a new policy which is expected to be unveiled this week, wherein it has proposed a 25% hike on the imports of steel and 10% hike on, for that matter, for aluminium imports. Before we get on to the impact, let's understand which all countries countries' exports to US and their percentage share in them each. If you look at the percentage, the high exposure is of Canada, Brazil and Korea, would stand at 17, 14 and 10% respectively. India and China relatively have a low exposure to US exports, as much as 2% for that matter. HSBC Global Research pretty much puts across that point. It says that there is a very minimal impact of the direct impact of this development on the steel producing companies. However, it does also says that these measures are positive for US based mills, but then are negative for the countries which are exporting to US, because of which the exports are expected to be rerouted and there could be some pricing pressure. Given that even a 1% drop is seen in terms of the domestic price, there could be a 2 to 10% contraction in terms of the top steel players' EBITDA. If you look at the sensitivity analysis chart put out here, you would see Tata Steel and JSW Steel EBITDA could contract by as much as 5% in FY19 if there is a single % drop in domestic steel prices. The magnitude is higher for SAIL at 10%, and that for JSPL is at around 2.3%. Morgan Stanley also pretty much reiterates the same point. However, it says that the Hindalco downstream operation, that is Novelis, will tend to get impacted by this development and will have some bearings on the financial, given that Novelis actually has sourced a lot of aluminium requirements locally, and escalation in the prices there would lead to a higher input pressure for this company. Having said that, it however feels that given the export rerouting, imports to India is unlikely, and even if there are incremental imports or incremental supply that the country could face, the demand at 6 to 7% could take care of this incremental supply situation.
Nikki, thanks for that. Let's get an expert voice in. Also, there is hardly any direct impact, as Nikki was mentioning. Rakesh Arora of Go India Advisors expects some indirect impact for Indian steel makers, especially when a decline in prices triggers round-tripping globally. According to him, JSW Steel may be the likely one to be worst hit.
Today, Canada is the country which will be most impacted because they have the highest share of exports of both steel and aluminium into US. But that means that Canada will have to push material somewhere else, and somebody else will have to push somewhere else. So it all boils down to global demand and supply. Currently, the steel price is around say 50,000 rupees per ton for Indian companies, and 1% is around I would say 500 rupees per ton. And companies are making EBITDA per ton of around 10,000, so there's a 5% impact. So a 1% change in steel price is around 5% impact for the integrated Indian companies. It could be larger for non-integrated guys. So between 5 to 8% is what I would think. From Indian perspective, I think JSW has the highest share of exports. So they are the ones could be more impacted. And also, they are just converters, so they don't have benefit of cheaper iron ore prices. So their margins are lower than, say, a Tata Steel. And so their, variability or impact for a percentage change in steel price is going to be slightly higher.
That was Rakesh Arora. We'll slip in a break on that note. Coming up next, veteran journalist Rajiv Sardesai weighs in on the implications of the BJP's victory in the Northeast. That conversation coming up in just a bit.
बढ़ते समय के साथ बढ़ती सुरक्षा का वादा। LIC की जीवन प्रगति पॉलिसी, जिसमें बीमा की अवधि में हर 5 वर्ष बाद अपने आप जोखिम सुरक्षा की राशि में बढ़ोतरी होती है। LIC की जीवन प्रगति पॉलिसी।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
फंडिंग का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
a stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated, selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays, only on Bloomberg Quint.
Back on lunch, the headlines at this hour. Bad start to the week for the markets, Nifty falling for the 4th straight day. Metal stocks take it on the chin. India's services PMI contracts in February to come in at a 6-month low. And The Shape of Water wins big at the 90th Academy Awards, bagging 4 Oscars, including Best Film and Best Director. Before we get to that, a quick check on how the markets have been faring in the last 30 minutes. Metal stocks, as I said, have been leading the decline. Yatin is taking a closer look. Yatin.
Thanks for that, Harshan. If you look at the Nifty, it opened below the 100-day moving average, and clearly post that we saw some selling pressure coming in. In fact, the Sensex is also trading below that 34,000 marks, down by nearly 400 points. And if you look at the advanced decline ratio also, that is clearly quite signaling a weak market. 4 advances for 46 declines, so that is the kind of market breadth. So almost 1 stock gaining for 9 declining. Of course, if you look at the broader markets, the BSE 500 stocks, G Shipping, Bank of India, Lakshmi Vilas Bank, PFC, all of these stocks at a 52-week low. And surprisingly, bucking the trend is the mid-cap IT pack, wherein we have seen Hexaware, Mindtree, KPIT, as well as other stocks like NIT Technologies gaining. So mid-cap IT is doing well. Of course, Aurobindo Pharma, that stock is in focus after the US FDA issued a Form 483 with 9 observations for the Hyderabad unit. Stock is down 4.5% last time I checked. Of course, as you were mentioning, steel and metal stocks are in focus after the kind of tariffs that we are talking about in the US markets, and clearly that have spooked the steel companies, JSW Steel, JSPL, SAIL, all of them in the red, top losers in the F&O segment. And not only that, aluminum companies like Nalco and Hindalco are also looking weak in trade. And apart from the metal stocks, we have Tata Motors, and after reporting weak US sales, which are down 2% on a year-on-year basis, the stock has hit a fresh 52-week low. So clearly, the weakness in Tata Motors continue. So broadly, it has been a weak market with many stocks hitting fresh 52-week lows in trade today.
Yes, and thank you for that. Some macro data. India services sector PMI contracted in February, fell to a 6-month low. The Nikkei India services PMI fell from 51.7 in January to 47.8 in February. It's the lowest level since August. The index slipped below the 50-point mark that separates expansion from contraction for the first time in 3 months. Politics. The BJP has swept to power in Tripura and done exceedingly well in the northeastern states. The BJP's performance in the northeast, however, need not influence voters in Karnataka, says veteran journalist Rajdeep Sardesai. He also believes that a potential alliance between Mayawati and Mulayam Singh Yadav in Uttar Pradesh can spoil the BJP's present tally in UP by-elections and in 2019. Listen.
To be honest, Minka, I don't think that election in 3 small northeast states can have major implications for the larger national picture. The fact that the BJP will now be in government in all these 3 states doesn't necessarily mean that it has an advantage in Karnataka, Rajasthan, or indeed 2019. In numerical terms, because these 3 states between them return just 5 Lok Sabha seats, but in psychological terms, in giving a sense of momentum, giving the Narendra Modi, Amit Shah combined the self-belief that they are on an electoral roll, and to that extent diminishing or demoralizing the opposition, I think this has an impact. I think if you look at the headlines over the last 24 hours, it suggests that the BJP now is in power in 21 states of the country, covering 70% of the population, and that in itself gives a sort of morale booster to the BJP cadres, and really in a sense is a bit of a blow to the Congress party in particular, that at one time used to dominate the politics of the Northeast. So I think in psychological terms, this is a major boost for the BJP, not necessarily in numbers when it comes to the other states.
Rajdeep, good morning. Neeraj. After the Gujarat verdict, while BJP may have won, but Congress gave it a scare for real, and then the Rajasthan by-polls as well, it was said that maybe there is a bit of a resurgence we're seeing in the anti-BJP ranks, whether via Congress or by other parties. Does this kind of negate that sort of resurgence that we were starting to see?
Well, look, I increasingly believe every state election is distinct to the next. What happened in Rajasthan was significant in the context of Rajasthan, a state that goes to polls in November, December this year, that the Congress won 2 Lok Sabha seats with a fairly substantial vote swing in its favor. Could be a pointer to what could happen in Rajasthan come December. On the other hand, what the BJP was able to achieve in Tripura is remarkable in the context of the politics of Tripura itself. So I would hesitate to generalize on the basis of any state verdict that any party is experiencing a resurgence or a downfall. I think we are increasingly finding that each state battle is very distinct to the next. So I would, at the moment, really believe that the Congress will have to put all its eggs in the Karnataka basket. This is a state that it rules for the last 5 years, and now along with Punjab becomes the only major state in the country where the Congress is in power. So I think winning Karnataka will be significant in the context of any sign of a resurgence in the Congress. There is no space for the moral victories that the Congress talked about in Gujarat. The Congress needs desperately now to win Karnataka to have some momentum going into the winter state elections of North and Central India and then into 2019. So I think Karnataka will give us a clearer picture of whether the Congress has actually got its act together. Because if the BJP wins Karnataka, then I really believe that the BJP will almost see itself as an unstoppable juggernaut going into the winter elections.
Rajdeep, I have two follow-up questions. Firstly, what are the prospects for the Congress to sort of retain Karnataka? I think, Amit Shah has just consolidated victory after victory after victory. And you can, sort of diagnose this down to great party organizations, support from RSS workers, whatever it may be. The fact is that he seems to have shown that he's a winning machine. So is Karnataka, up for grabs for the BJP in your assessment? And then I want to talk about third front politics. We just heard the Telangana Chief Minister mention that yesterday, but I'll come to that later. First, Karnataka.
Well, I think Karnataka is a very tough state to predict because it's not a traditional two-party state. There's also the Janata Dal secular of the former Prime Minister Devagowda, who's actually interestingly aligned himself with Mayawati's BSP. Remember also, no party has been re-elected in Karnataka since 1985 when Ramakrishna Hegde got re-elected. So history would suggest that there is an anti-incumbency every 5 years that sets in Karnataka. To that extent, advantage BJP. However, the Congress has one advantage in Karnataka. They have possibly a much stronger local leadership in Siddaramaiah than what the BJP can offer in the shape of Mr. Yediyurappa. I would say Karnataka is 50-50 at the moment. It's up for grabs. I wouldn't rule out even the possibility of a hung assembly in Karnataka because of sub-regional splits and then Devagowda's party playing an important role in a post-poll alliance as of today. But as the BJP has shown in the past, it has the ability to ensure last-mile connectivity, better booth management, better organizations of elections, and that can make a difference in the last month. So Karnataka is in May. Some polls that were done last month suggested actually that the Congress had the edge. I still believe it's 50-50, and I wouldn't rule out a hung assembly in Karnataka at the moment.
So I think, everybody's trying to understand what this means for 2019 because that's really the big game. Raghav wrote a column, on BloombergQueen.com contrasting the numbers, right? He said BJP swept across Northeast approximately 50 lakh voters, but over the last few weeks, it was swept away by about 1 crore voters in the by-elections of Rajasthan and MP and other by-elections. The other way to look at it is whether this is helping consolidate a third front. We heard the Telangana Chief Minister yesterday mention that this might bring a coming together of non-Congress, non-BJP parties. We also heard of Mayawati's BSP potentially offering some support to some Samajwadi parties in some local elections as well. So what's this shaping up? At this point in time, I know this is going to keep changing every month through the year, but how is this shaping up for 2019?
Very, very interesting and intriguing, particularly Mayawati offering some kind of support to the Samajwadi Party in those two crucial elections, by-elections in UP, in Phulpur and Gorakhpur, because that would suggest a realignment of forces in India's most populous state. Look, it's very clear. I don't think that the third front as a collective is likely in 2019, but I don't rule out the possibility of neither the Congress nor the BJP being in a position. I would suggest that there is a strong possibility rather of both the Congress and in particular the BJP needing some of these third front parties to form a government. I don't think the Congress at the moment is in any position to be within striking distance of 272, but 220 could be the new 272 in a general election, and then you will need smaller parties, including parties like Chandrasekhar Rao's Telangana Rashtra Samiti, that could play an important role in post-poll alliance politics. The Mayawati Mulayam or the Mayawati Akhilesh combine in UP is critical for any non-BJP opposition to actually fancy their chances of creating a potential non-BJP government or a non-Modi-led government. And I think, therefore, that will have to be looked at closely. Remember, the BJP maxed out really in UP. So any decline it has in UP will not be overcome by minor gains that it gets in the Northeast or in a Bengal or Odisha. UP is critical. So out of all those stories that you pointed out, I think the headline story was that for me, the possibility of Mayawati tying up with the Samajwadi Party, which clearly would then signal that the BJP is facing a real challenge in its bastions. It swept northwest and central India. Now it's reached almost saturation point there. Any decline it faces of 50 to 60 seats in states like Rajasthan, Madhya Pradesh, Maharashtra, Gujarat, Uttar Pradesh in particular will not be overcome in the rest of the country. And therefore, I think whatever happens in UP in the next 6 to 12 months in terms of a realignment of alliances is critical. And I would look at that extremely closely. A third front, I'm not sure that is possible at the moment, given the inner contradictions between individual parties, but a broad-based post-poll alliance forged simply to stop Narendra Modi from becoming Prime Minister should the BJP fall short of the numbers. Don't rule that out, given the nature of our politics at the moment.
Okay. That's Rajiv Sardesai on the political situation. Let's move on and talk about real estate now. 440,000 homes remain unsold across cities at the end of 2017. That's according to a recent survey by JLL. Of these, Delhi National Capital Region has the highest volume at over 1.5 lakh units. Kolkata had the lowest. So what's keeping the real estate market subdued? Are we likely to see a pickup in 2018? Ashutosh Limaye, Head of Research at JLL India, now joins us on this conversation. Ashutosh, thank you so much for joining in. What's the breakup? Can you take us through some of these numbers? How many unsold homes? How many of them are in a ready-to-move-in category? How many of them are under construction?
The unsold inventory also includes inventory which is under construction. So from that perspective, while the total number is about 440,000 units across top 7 cities, less than 10% of that is actually ready to move in apartments. What it means is if you want to buy and move in immediately, the choice is pretty limited. Having said that, the 3 larger markets, NCR, Mumbai and Bangalore, have a fairly large number of unsold units. Apart from Bangalore, where it's about 10% of about 70,000 unsold units which are completed and lying vacant, Mumbai and NCR, the percentage is less than 5%. So what it means is buyers are out there in the market. There is enough demand. The only observation the developers must note is buyers don't want to take any construction risk or delay risk. So they are buying towards the end of the completion of the project. So the message there for developers is there is enough demand, don't worry about it, but please do not delay your construction. Keep constructing, you will find buyers towards the end and they are willing to pay a premium for that as well. Okay. Overall, while the 440,000 number looks big, the situation is not as bad as the number portrays.
Okay. Ashutosh, if I can just push that point about the inference that you're making on demand, what is the evidence on the ground that you're seeing to say that demand is picking up? And specifically, each of these markets have their own sort of factors of why things work, locally, demand, price, and so on. Is there any evidence to prove that the demand is actually picking up?
Yes, in fact, the quarter that ended with 31st December 2017 date, we did see a rising figure for actual sales. And that was true particularly for the state of Maharashtra, where Mumbai and Pune, 2 large markets, are part of. So in actual numbers, the sales have improved in last 3 months. Also, the new launches have improved in last 3 months. It's a very good sign because when new launches increase, that means that developers have started regaining faith about the market. When sales increase, it then reflects into new launch increase as well, and that's what we have seen happening. See, affordability has improved. The interest rates have remained reasonable, but for last few days, announcement from the banks that the deposit rates have been increased. Months prior to that, the rates have remained really competitive, and developers are indeed concentrating on completion of work at hand. So that is actually helping the buyers to feel more confident about buying. And RERA, the states that have implemented RERA well, and I mean Maharashtra by that very prominently, there is a sense of greater protection and greater empowerment in buyers' mind. With that kind of strength, they are coming out and indeed buying.
Last 2 questions. When you in your conversation with the developers, how do you see construction activity taking place? Is the last mile being done at a frenzied pace? Is it tepid?
Actually, what has happened is there is a very clear distinction between two categories of developers. Developers who have read the market signals well and who have organized capital for the construction expenditure, their projects are doing pretty well. All those projects where construction is a regular activity are meeting the buyer's expectations and sales are happening. Whereas the other category of developers who simply relied on buyers' money to complete the construction, they are facing problems and sales there are not really happening. So they are now trying to do joint ventures or development management agreements with some of the bigger names and reputed names who will lend capital as well as name to the projects, and they hope that once the construction activity starts happening again, towards the end they would be able to buy and sell, and the buyers will come back to those projects. By and large, developers have understood the importance of staying transparent with the buying community and demonstrating that construction activity will not suffer. At the same time, we are seeing consolidation where developers who are not serious enough about project completions on time, they are exiting the market. Some of them are lucky to find buyers. Some others are not as lucky and their projects are stuck, and unfortunately some buyers are also stuck who have bought in those projects.
Okay, very quickly, what about prices? Stable or moving northward?
Prices will stay stable. There are cities and micro markets within certain cities where it will inch northwards, but very closely linked with inflation rates. So no price rise expectation for the next 1 year. By and large, stable, little bit up related to inflation.
Ashutosh, we'll leave it there. Thank you so much indeed for joining us. That's from JLL, talking about real estate. About 440,000 residential units are unsold all across India. Delhi NCR leading the pack. Let's move on to a Bloomberg Quint exclusive. Sun Pharma may be third time lucky. Sources say the US FDA has made only minor observations at its Halol plant. Darshan has been tracking the story for us. What are those observations, Darshan?
Yeah, so basically there are 3 observations which the company had actually put out, and none of them relate to data integrity. Even if you look at the last time it happened, there was no data integrity issue. Now, the first observation that the US FDA points is basically in terms of equipment. There was poor upkeep of certain equipment. Some bit of rusting was also seen on the equipment. So that is something that they're saying. So there are 3 broad parameters in which, they have said there were certain instances of wrong incubation temperature for microbiological issues. So that is the second one, which is pretty much a procedural issue. And the third one is procedural lapses include inadequate training. So at this point of time, these are the 3 broad headlines which Sun Pharma had said that they have 3 observations. So these are the 3 observations that we've got from our sources. Apart from it, there will be sub observations that will be there. We also want to say that we are not in possession of the Form 483 that the US FDA will give us. This is what sources close to the company and who have seen the Form 483 have indicated to us. We asked Sun Pharma to respond to the observations. We sent them yesterday only, but they have not responded to our queries at this point of time. We had also asked the US FDA for their view, and they are saying that they will respond to the queries as soon as possible, but they haven't yet responded to the queries. So as of now, it seems that, if you see that, and this is public knowledge, because from the first observation that first inspection that happened in 2014, from a 23 to 9 to just 3 observations right now. So it seems that Sun Pharma has gotten better in terms of what they're doing. As far as the entire timeline is concerned, there were issues. The FDA visited the plant in September 2014 where there were 23 observations. Then they got a warning letter because of these observations. Then again in 2016 December they had another inspection in which they had 9 observations, and finally now it is 6 observations as far as 3 observations as far as the latest plant is concerned. So what we are saying is the observations that are there are nothing to do with data integrity at this point of time and pretty much procedural in nature.
Okay, hold the thought. So that stock has been up about 1.5% in today's trade. That's Sun Pharma for you, but you also been talking about AUROBIN, that's received another 483 for its unit in Hyderabad. 9 observations, it seems. How serious are they?
Yeah, so basically they are pretty serious because it's an injectable plant. Now, the plant was inspected and that was the problem that was there because it's a sterile injectable plant. That means the US FDA will be much more stringent. Now, in terms of what these observations are, out of the 9, 4 of them relate to equipment issues. So the first observation that they talk about is in terms of deficient system in maintaining equipment. There were black spots that they found on the equipment, which was there last time. Equipment and utensils not clean, maintained and sanitized, or clear no-no for a sterile injectable plant. Again, they speak about that the equipment used are not of an appropriate design. They also speak about that, the building is not free of infestation. They found mosquitoes inside, the sterile injectable area. They're saying the process of cleaning, maintenance of equipment is deficient. So if this was there in a normal plant, this would have been allowed. But, this is a sterile injectable plant. So that is a big problem. The next observation relates to employees' lack of training, which is not extremely serious at this point of time. Again, they speak about quality control. It's not in an appropriate level of acceptance or rejection. The next one, they talk about laboratory controls and documentation. And finally, the last observation that they have is in terms of computer controls, which could be a little serious. But Aurobindo has 15 days to respond to the US FDA in terms of what they are planning to do. Even here, there are no data integrity issues found, but they're procedure in nature, but they are very serious for an injectable plant. That is the problem, and that is why Aurobindo has reacted negatively. It's a strong criticism of sterile facility, and the response that Aurobindo will give is very, very critical on how the US FDA. So now the court is in the US FDA, and there is a chance, there's very little chance of, a warning letter coming in, but there is still of a chance if they did not respond adequately. And the reason we are saying is Bayer also got a warning letter for some similar observations that it had to Aurobindo. But overall, the counter is reacting negatively. 9 is a big number for, and that too also for a sterile injectable plant.
Okay, that's Aurobindo Pharma for you. Darshan, thank you so much for that. SR Steel's resolution professional wants more time to submit his recommendations on the final bids. The committee of lenders who were slotted to meet today have now had to defer it to a later date. Vishwanath Nair has been tracking the story for us. So when has this been rescheduled to, and what's
been rescheduled to Wednesday is what our banking sources are telling us at this point. So today's meeting was critical because what over the last few weeks, this debate about whether these bidders are eligible or not, that has been going on, raging on, and there's a lot of confusion in the market in that regard. But now that this has been delayed, it's clear because as sources have told us in the past also, there are hundreds of companies involved with these bidders. New Metal, which is a Mauritius-based entity backed by VTB Bank. There's also Revanthuria, who's part of New Metal. So that is a clear problem with the 29A ordinance that the government came up with, saying that the promoter should not be bidding for these companies. On the other side, the other bidder is ArcelorMittal. They had a stake in Uttam Galva, which was another company that went into insolvency. So they sold their stake, of course, and now are no longer promoters of the company. But the issue is that the question that is being raised is, can you just sell the stake and absolve yourself of any probability, any liabilities of these companies? So this debate is still going on, and considering the resolution professional is taking more time, he's going to possibly come up with his recommendations by Wednesday. His lawyers, as well as Satish Kumar Gupta, the professional himself, are going through these papers. They're having continuous meetings with both the bidders. The lenders will look at these. Remember, the lenders are not privy to any information at this point in time. They have no idea what the resolution plan submitted look like. By Wednesday, they will get to know more of those. So, what exactly are these plans submitted? Are they eligible or not? All of these details will come up over the course of the week. So that's
as it stands, there are only 2 serious bidders.
The only 2 bids that have been submitted are ArcelorMittal and New Metal. So they are the only 2 people in the game at this point in time trying to buy out SR Steel. So.
Okay. Vishwanath, thank you so much for that. That's the story of SR Steel for you. Well, we'll wrap up the show with the news from the Oscars. The Shape of Water has been crowned as the best picture at the 90th Academy Awards. The movie, which narrates the story of a mute woman, has bagged a total of 4 Oscars, including Best Director and Screenplay. Frances McDormand won for her lead role in 3 Billboards Outside Ebbing, Missouri, while Gary Oldman was voted the Best Actor for his portrayal of Winston Churchill in The Darkest Hour. Out of time on this edition of Power Lunch. Thank you so much for watching. Countdown is up next.